Good day, everyone, and welcome to today's market fundamental and technical breakdown for the time duration of 16th of September to the 20th of September. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading, real estate, can also get the right knowledge to help them to become what? Profitable trading the financial market and making money passively through real estate investment. So today we'll be diving through the technical aspect of the market and also the fundamental aspect of the market for these time durations. Okay, if this is your first time, smash the like button, share this content with your friends and families who are into trading and also who are financial analysts and investors so that they can be able to know how to put their money in the right position heading towards this week. So I'll share my screen right now. Okay, right now you should be able to see my screen. Okay, right now you should be able to see my screen. To start off, we need to introduce you to the sponsor broker, HFM. HFM is my recommended Forex broker. The link is going to be attached below on the description of this video. If you go over there, you click on the link, my recommended Forex broker, or you click on the link tree. You're going to see a link tree there. Then it's going to give you a list of every single detail you need to know about this Forex broker. Then once you gain access to this page, you click on register, click over here on register, and on the register page, you have to put in your country. After you put in your country, you put in your email, you put in your password. Then you're going to receive a unique link. You're going to receive a unique link on your email. You click on that unique link, and then it's going to verify your email. To continue the registration process, I have a video attached on YouTube. Okay, I will drop the video at the end of this particular market fundamental and technical breakdown. So watch to the end. At the end, you're going to see the video process that is going to guide you on how to register with our Forex broker. Also, there is a link to our WhatsApp and our Telegram group chat below. These are our free link to join our group chat. In this group chat, we're giving you guys education for free. We're giving you guys signals for free, which you can use to make money in the financial market after you have learned the basic steps on our on our on our group chat. Okay, so just join the group chat. We'll introduce you to the basic steps, how you register with the broker, get signals, you fund the account, and you make profit with us trading live and also using our signals. So don't hesitate or don't delay, just join the group chat right now. Okay, so with that said, let's dive into the charts. So currently we are looking at DXY. DXY is the strength of the dollar. DXY is the strength of the dollar, and for DXY, it tells us if dollar is weak or dollar is strong. So last week we got DXY from here. Then we had this M pattern to move up, move down, move up, and then another move down. So the movement of DXY for last week was this. This was the movement of DXY for last week. So like I told you guys, when DXY was here, I explained it on our last market fundamental and technical breakdown that the market is currently what? It has a complicated structure. It has a complicated structure. Okay, it's not really trending up or trending down, but we just see that the market is on a downtrend. Like I drew this for you guys last week. You see that the market is on a is on a massive downtrend. So you need to take it very, very serious. You need to take it very, very serious that this trend might continue going to the downside, or we can see a trend reversal that will push the market to the upside. Okay. So for what I see now, the market is currently in a demand zone and it is leaving this demand zone. Okay. And from this demand zone now, we also have a psychological level there. We have a psychological level, which is 0.1. That's the psychological level the market is currently testing, and it is respecting that psychological level. So from here now, we can expect the market to just keep moving to the upside. You can expect the market to keep moving to the upside, okay, respecting the psychological level. So what we're expecting market to do now is from this point now, it's going to move up, okay, have more like a retracement, like a corrective structure, or it's going to be taking this structure gradually impulsive. It's going to be corrective or impulsive, but this is going to have a retracement to the upside, and it's going to be impulsive or corrective. Okay, so after this, then we can now expect another drop for DXY. Remember, this week on Wednesday we have the FOMC decision, which has to do with the Fed, the Federal Reserve of the United States of America, determining the interest rate of the United States dollar. It's going to be a very big event. So this is what I see for DXY. Corrective structure to the upside and then short DXY. Okay. Because we are currently bouncing off from a demand level. So for Euro USD, the move for last week was this. This was the move we got for Euro USD last week. From the Monday, we had this drop to the downside, and after this, we had the push to the upside. Okay, so ECB interest rate decision on Wednesday. Okay, ECB interest rate decision on Wednesday happened over here. Oh no, that was on Thursday. It happened over here, and that was what caused the market to move to the upside massively on Thursday. Okay, so the whole week for Euro from Monday to Wednesday was just more like a down push. Okay, then after the ECB interest rate decision, whereby they cut rates like expected, then the market moved to the upside for Euro against the dollar. So what we expect now for markets is, because we expect DXY to go up before it goes down. Euro USD is 80% correlated with the dollar. If the dollar is going up, Euro USD is going down. If the dollar is going down, Euro USD is going up. So what I see now is for Euro USD, that this corrective structure is going to be impulsive, or reversal, which is going to be impulsive. Then once we come over here, we grab some pending orders over here, probably from the level whereby ECB cut interest rates, then we now be expecting price to shoot to the upside. So we're watching closely, and psychological level, we can monitor this. The market at is 1.105, 1.105. You can monitor the market at 1.105, monitor the market at 1.10, okay, to see what market to do over there, because this 105 is over here. This was here last week. This is 105, which is a minor psychological level, and then the major psychological level is 1.10. This is 1.1. This is the main psychological level. Okay, so monitor the market closely and see what the market will do. Meanwhile, the market already respected this psychological level of 1.11. Okay, it's the respected psychological level 1.11, and it is moving to the downside. So probably the market could just head to this minor psychological level over here, which is 1.105, and then continue shooting to the upside, or it can decide to dip lower towards this demand zone where we have the ECB interest rate cut for last week Wednesday, to grab some pending orders, buy limit orders that was not activated. Then we can now start shooting to the upside. I can also see this fair value gap. So let's let's be mindful of it. I can also see this fair value gap. So the market could also get to this fair value gap, respect the fair value gap, and start moving to the upside. So, but for one thing, I'm for sure is that the market respected the psychological level of 1.11, and it is moving to the downside. And this downside could be either this level, or this level before we start shooting to the upside. So it's your choice if you want to trade the down corrective structure or the impulsive buy structure. It's all your choice. Then the next on our list is AUD/USD. AUD/USD, we caught AUD/USD last week. It was a good trade on the Friday. And the signals was called out for everyone in our community. So dive down to our Telegram link right now. The link is going to be on the description to join our community. So for AUD/USD, I have the same bias as well, but it is not that complex compared to Euro/USD. So AUD/USD expecting a corrective structure back to this demand zone over here. This is where we have our buy limit orders. And then from here, we can now anticipate market to start pushing to the upside again towards this high over here. Towards this high. So corrective structure, then another push to the upside. And this push to the upside could happen on the day ECB is going to cut interest rates, making dollar weak. Okay. So that is it for AUD/USD. Similar with NZD/USD. NZD/USD is very close to the demand zone. Yes, so corrective structure, and then one push to the upside. Corrective structure inside there, one push to the upside. We already see we had a change of character on the H4 time frame, so we're more of bullish right now. And if you take the Fibonacci from this swing low, the market created this swing low, okay, to the swing high. Okay, the corrective structure most times is meant to be between the 50 and 60%. Based on ICT concept, 50% is the discount level, and 62% is the sorry, 50% is the equilibrium level, and 62% is the discount level. So we can expect market to come into this zone. Okay, and from here we can now start looking for the expansion. The expansion is going to head towards the 50 and 62% Fibonacci expansion levels. Okay, so this is the move we see for NZD/USD, similar to AUD/USD, and similar to what's it called, Euro/USD. So if you were to take this trade, this is not financial advice, to do your own research. It's not financial advice at all. Do your own research. You can get these around 25 pips outside the zone. You're on a very safe level, 25 pips. Some people would like to use 20 pips. So very, very conservative. That's 25 pips, and then we can aim for the high. For the week, you can get around 1:3. 1:3, that's 75 pips. Okay, so that's 75 pips, 25 going for 75. It's not bad. It's a good trade. 1:3 risk to reward ratio. Okay, so that's what I see currently for NZD/USD. This is not financial advice though. So do proper risk management and research. So for GBP/USD, we have the same structure over here. You can see on the 4 hours time frame, we have this change of character over here. Okay, so that's change of character, and don't be forgetful. This is still a downtrend though. Okay, this trend is still over here. This is still a downtrend over here. So so that's why we spoiled out the market moving to the display downtrend, right? So that's why we spoiled out the market coming towards this level. It's going to either respect the psychological level of 1.31 psychological level. Don't that respect psychological level and push off, and aiming for this high of this particular supply and also channel. This is where I see this is the channel. It's more like a corrective structure of this major push. This is the major push over here. Okay, and all this here is the corrective structure, which we're going to still get another major push similar to this particular push we see over here. So with that said, so what I see GBPUSD is like it's already respected its psychological level of 1.31500, and then it's heading towards 1.31, which is a major psychological level. And when it gets there, we see the reaction, and it has to do with a change of character for a bullish structure. Then we now start aiming for the buys and heading towards this supply zone, and also the high of the trend channel, okay, the bearish trend channel. So that's what I see currently for GP USD. Okay, so the next on the list is gold, XAUSD, XAUSD, XAUSD. You see the markets rallied massively last week, reaching a new all-time high. It's loading. Okay, so for XAUSD, you see that the market rallied and created a new all-time high. And from this all-time high, what I expect market to do is have a little currency structure and that push to the upside. The psychological level where I'm expecting a massive rejection and pullback is from the psychological level of $2,600 per ounce for gold. Okay, so once we have this currency structure, little pullback on little currency structure, I mean, then we're going towards have another push to the upside on gold. But this massive drop is still going to come, but not anytime soon. I just want you guys to focus on this little currency structure and push the upside on gold. The psychological level I'm aiming for is this 2,600 per Bitcoin. You can go down to a smaller time frame like 1 hour. Since you already know the trends, I'm going to a smaller time frame of 1 hour and also 15 minutes to spot your entries. You see, it's respected over this psychological level of 25,800 and it's $2,585 per Bitcoin. This is respected here. So from here now, we can still what the correct structure to the downside. You can see this candle close below this psychological level of $2,580 per Bitcoin per gold ounce. So we can now drop, okay, then have this corrective structure. You can see over here that we have this change of character over here. These or break of structure to the upside, and this is demand zone, the current demand zone I see the market aiming for. Okay, so this is the current demand zone. So from here, literally, we can expect gold to start pushing to the upside again. Okay, and can now expect it to head towards this $2,600 per ounce. Okay, then you now start analyzing what next happens. But for now, these are our main focus: corrective structure, and that puts the upside for gold. Then for Bitcoin today, let's go down to, okay, so I already analyzed this. It's dropping very well. So for Bitcoin, it's quite similar. Let me go to the higher time frame of 4 hours. So for Bitcoin, we already know that we're having a massive bull run, big push. Okay, so this is where this push started from, and this is a protected low. Over here is a protected low. Let me spot it out for you here. The protected low. Why I call here a protected low is because if you check properly from this corrective structure, remember from this corrective structure, I draw this almost every Sunday to remind you guys from this corrective is a massive extended corrective structure. You can see I labeled it up here, extended corrective structure of this impulsive wave. So this is the impulsive wave. This is the wave now we see on Bitcoin. Impulse, correction for another what? Impulse. And the impulse is going to be an extension of the 62 Fibonacci retracement point. So the extension is going to be towards this mark. Okay, that means around $95,607 per Bitcoin. Okay, So this is what I see. This Fibonacci retracement extension tool works like magic. Okay, trust me. So over here now, why I call that this level a protected low? Why I call here a protected low is because over here we had liquidity line here. Those who bought from here and this had this push up would have their stop loss line over here. But market came and took that liquidity, took those stop loss out, okay, and then push the upside. After this push the upside, you had the corrective structure. This is the protected door of this after this impulse correction and that impulse. So I'm expecting market to come and break this high, okay, break this high and head towards this high for Bitcoin. So that's what I see right now. So let's do the Fibonacci retracement and extension over here as well. So from this low where we see that the market took liquidity in the past and we took it to the high. So after we took it to this high, what can we see? Let me pinpoint it. Okay. So we saw that the market came towards this what? Fibonacci retracement point of 76.40. 76.40. Once it got there, we had what? A massive what? Reversal. Okay. And the bullish trend started proper. Okay. That's why I call it a protected low. A completed reversal. So this Fibonacci works like magic. So from here now, we can now start expecting what? A massive impulsive wave. But the first level that will be taking is this high. This high will be taking over here. Everything here will be taking. These buy stops, there are buy stops right here. So these buy stops will be taking. Okay. This is my level where I'm aiming for the market to head towards right now for Bitcoin. This is the first level. Okay. So whatever you're doing, know that the market is bullish. So you'll be looking for bullish structure. That doesn't mean you cannot trend against the trend though, but it's quite more advisable to trade according to the trend. Okay. So corrective structure is what we're seeing for Bitcoin. Corrective structure, another push to the upside to take this liquidity above this high. This is the first level of take profits. The take profits can even extend, more than this. It can extend more than this. It can head towards this high, but we're taking this first level. So for this week, I'm telling you, just for this week, 16th to the end of the week, this is what we're aiming for. So you can now go down to the 1 hour and then monitor how the market reacts, okay? How the market reacts as it is coming towards this trend line, because this trend line is the current prevailing trend line that the market has been respecting so far. Okay, so let's watch that closely and we'll use that to call out our signals within the week on BTC USDT. So thanks so much for watching to this point. So I told you guys to also check out the fundamentals, weekly market outlook for 16th to 20th September. But finally made it to the first Fed rate cut. Will it be 25 or 50 base points? So how this is going to come, upcoming events, and this is by Forex Live, and this is the writer, Della Mota. So on Monday, we have the New Zealand Service PMI, and Tuesday we have Eurozone ZEW, Canada CPI, which has to do with inflation, US retail sales of stores, US industrial production, and capacity utilization, US NAHB housing market index. Then on Wednesday, we have the UK CPI, we have the US housing starts and building permits, we have the Bank of China summary of deliberation and the FOMC policy decision rate on Wednesday. We'll be trading that news live. It's in the evening. That's why I like to trade that news. I'm trading to you guys live. Then on Thursday, we have the New Zealand Q2 GDP. We have the Australian Labour Market Report. We have the Bank of England policy decision rate. So the decision rate, the ECB, Bank of England is going to be giving their own interest rate decision on Thursday this week. That's also a good potential for us to buy going to £10 against the dollar if they cut rates. Okay. So we have the US jobless claims as well. Then on Friday, we have the Japan CPI interest inflation. Then we have the Bank of the PBOC LPR. Then we have the Bank of Japan policy decision, UK retail sales, and Canada retail sales on Friday. So the two most important news or three most important news I saw over here is the card CPI. Every news here is important, okay? But the ones that I think that it will be quite more understandable and we can take good position of is this card CPI. Okay, if the CPI is lower than the expected, it's going to make the dollar the currency to be weak. Like card for the past 6 months, the CPI has been very, very low. So if that continues, then we can see USD card to be weak against the dollar. Okay. Then we have the UK CPI. We also have the FOMC policy decision rate. Then we have the Bank of England policy decision on Thursday and the US jobless claims on Thursday. So let's go down to Wednesday and read what they have to say. Or was it Tuesday is when we have the Canada CPI. Canada CPI is on Tuesday. Okay, so Tuesday it says the Canadian CPI year-over-year is expected at 2.1%. They're expecting 2.1% versus 2.5% before, okay? So they're expecting to go lower by 0.4%. Why the month-over-month momentum is seen at 0.0% versus 0.4%. So they're even expecting the month-over-month to drop to 0.0%, which means that totally no inflation in Canada. As always, focus will be on the underlying inflation measure. That's where the focus will be on. The team lean CPI year-over-year is expected at 2.5% versus 2.7% per hour, and the median CPI year-over-year is seen as 2.3% versus 2.4% per hour. And if all this happens, we expect Canada to be weak on Tuesday. Okay. So yeah, they said on that Tuesday, the Bank of China is expected to cut rates by 25 basis points at both the last two meetings. Okay, this is Bank of Canada, not Bank of China, though. This Bank of Canada. Bank of Canada is expected to cut rate by 25 basis points at both the last two meetings left for this year. But there is also a chance that the central bank delivers bigger rate cuts if growth and inflation were weaker than projection, as Governor McLean mentioned last week. Okay, so this is the projection. Okay, this projection, and they're saying that they might even cut bigger if growth and inflation were weaker. Okay, so that's just it mainly. And then on Wednesday, the UK CPI year-over-year is expected at 2.2% versus 2.2%, the same figure. So no more changes there. While the month-over-month measure is seen at 0.3% versus minus 0.2%. This is good for UK. So if this happens, and we get a figure higher than 0.3%, we get a figure higher than 0.3%, going to make Great Britain pound to be strong. So on Wednesday, we could likely see the buy pressure we're expecting for Great Britain pound to start kicking in. Then the core CPI year-over-year is expected at 3.5%, which is higher than 3.3%, which is good for Great Britain pound, while the month-over-month figure is seen at 0.4% versus 0.1%, which is good for Great Britain pound. The market expects the ECB to keep rates unchanged at the upcoming meeting and then cut rates by 25 basis points in November and December. Interesting. Okay, so the consensus among economists seems the Fed cutting rates by 25 basis points. The market's pricing through is evenly split between a 25 and 50 basis points. 25 and 50 basis points. Some people say that starting with a standard 25 basis points will be better because the economy is still fighting. It's still fine, okay? Some people say that starting with a standard 25 basis points would be better because the economy is still fine. And 50 basis points might be seen as panicky. Central banking is also about risk management, though. The market pricing is giving the Fed a nice opportunity to deliver a 50 basis points insurance cut without surprising. Things would have been much different if we had something like 30% probability for a 50 basis points cut and 70% for a 25 base points cut. The Fed didn't have the chance to see the labor market report last July, as data was released 2 days later. Maybe if they had the data a week earlier, we might have seen them cutting by 25 base points back then already, and then continue with 25 base points for the subsequent meetings. Chair Powell made it clear at the Jackson Hole symposium that they will not tolerate more labor market weakening, and they will do everything they can to keep it strong. Considering everything, starting with a 50 base point cut makes much more sense. The Fed can then show that it will just the Feds can then show that it was just an insurance cut via its summary of economic projection, and Powell can double down on that at the press conference. Speaking of the SEP, the market is expecting the Fed to deliver at least 100 base points of easing by year end, okay? The Fed can cut by 50 base points and then project 25 base points cut by year end. Further out, the market expects the Fed to deliver 150 base points of easing in 2025, which seems too aggressive at the moment. To sum up, I personally expect the Fed to cut rates by 50 base points, but in the end, what's important is that the Fed is finally starting to ease its policy, and the magnitude will be shared by the data in the next month, shaped by the data in the next month. Okay, so that's what we see for Wednesday. So if that base point cut happens, then we can expect the dollar to drop. Okay, the dollar to drop, and if the dollar drops, euro is going to be high. Japanese yen is going to be high because this is interest rate. And then this interest rate is what the banks use to borrow money. The Fed used to borrow money from investors, whereby they buy bonds. And then when they buy bonds, they pay them out in interest, okay? And also those who purchase mortgage, they pay interest based on that. So once the Fed cuts this interest rate, okay, lower, okay, then investors will be moving their money out from dollar and taking it to other currencies that are hiking rates, like the Japanese yen. That's why you see Japanese yen is gaining more traction right now. And then you see the yen getting stronger. We see the euro getting stronger. We see the Great Britain pound getting stronger. Like they already said, Great Britain pound might not cut interest rates now on this meeting, but probably they might cut in November, December. If that happens, then GBP USD is going to be buying massively. Okay, it's just a fact of common sense. Then to wrap up the week on Thursday, the Australian labour market report is expected to show 30K jobs added in August versus 58.2K in July. And the unemployment rate is remain unchanged at 4.2%. The market expects the Reserve Bank of Australia to deliver their first rate cut in February 2025, but the probability can be brought forward to December 2024 if the data were to disappoint in the next month. Okay, so this is the day we also expect the ECB is expected to keep rates unchanged at 5.00%, which if that happens, then the expectation of such a move has been shared by relatively strong data with PMIs firmly in expansion, inflation moderating at a slow pace, and the unemployment rate ticking lower. The market then expects the central bank to cut by 25 base points in November and December. Okay, so that's what I see currently for the ECB, and that's what we'll be trading on Thursday. Although we already have our viewpoints of the technical structure. We focus on technical structure, why the fundamental is going to give us the blood we need. Technical is the body of the market, then the fundamental is just the blood that flows into the market. So thank you so much for watching to this point. My name is Anthony Phillips Njoku. If you want to learn more about how to trade, how to fund your broker account or register your broker account, how to get signals, how to know how to analyze the market, just reach out to us on www.10xdigitallane.com. The link is going to be on the description, and you're going to get more insights as soon as possible. Have a wonderful and profitable trading week.